Hello, everybody. Welcome to our webinar this afternoon. I'm super excited to have one of our favorite people in the world speaking with us today. We're doing something a little bit different. We're speaking as the new generation would say, in real life. This is a new format for our webinar, and I hope all of you appreciate this webinar. So Han and Tracy are homegrown U.S. real estate investors. They've grown their portfolio significantly with the help of our mortgages. They were on a webinar earlier this year in January where they went through their experience, which will go through a brief snapshot of their story and how they got here. But more importantly, they were just in the U.S. on a roadshow, seeing their properties and also identifying new opportunities, as well as living their dream, which they're gonna. I don't want to steal their thunder. But I think it's worth introducing Han and Tracy and have them kick off and maybe give a quick recap of the last webinar. But more importantly, let's introduce yourself to the audience who may not know who you are.
Hi guys, I'm Tracy.
Hi guys, I'm Han.
So we're Singaporeans, and together we have built a portfolio of US cash flowing rental properties all the way from Singapore. So I think the cool thing is that we've been doing this for quite a number of years to a point where we've collected enough cash flow rentals to quit our full-time jobs. And we did it all while we were in Singapore, even while holding on to our jobs. So actually this year was the first time I saw all of my properties in real life. So that's pretty crazy. Yeah, you got.
Yeah, but also must say all thanks to American Mortgages also to help us to scale our portfolios by allowing us to take loans and do cash out refinance and grow the portfolios. Yeah, and we are very fortunate. We started off with as humble. We have humble jobs. Do our 9 to 5, and then after that we have a dream. We have a dream to travel the world, see the world. I think that's quite a lot of people's dream. So. But we decided how can we do it? But we need passive income, and no better way to have rental income in order to help us generate passive income. So we went about looking over like the world to see where are the possible ways that we can generate. Yeah. So then fast forward a few years, we managed to, as what Tracy has mentioned, bought a couple of rental properties generating passive income. We bought a van. We converted the van into a camper van, and then we traveled from East Coast of the US to the West Coast of the US, traveling, hiking, seeing all the beautiful places and really living our dream life.
So on that note, we're going to pull up a picture of their recent trip to the US. Look at that. So first of all, I want to, for everybody that can see this, one thing that you can see that's fairly obvious is the smiles on their face, and it's always in front of property. So Han and Tracy, why don't you talk us through what we see here in the pictures?
Yeah, so obviously we visited our properties while we're there, but I think the really cool thing about the trip is that we get to travel, we get to meet new people, we get to hike, visit new places, enjoy ourselves. But at the same time, we have been managing our portfolio remotely. We have been networking with new people on the ground. We have explored new markets as we travel across. We explore new markets, talk to new people in the real estate space. So it's like work and play, everything at the same time.
It's really a dream life, I would say.
Yeah.
It's really a dream life. Yeah.
And tell us a little bit of this van that we see in the picture.
Yeah, it's a Mercedes Sprinter, 2014 Mercedes Sprinter. So we converted the back of it. So we put in bed, a kitchen, a kitchen, so you can cook. So we sleep in it, cook in it. We even have there's a toilet in it too. And then we drive all around the place. So I mean, a lot of times when we scroll social media, we see people having they do glamping and stuff like that. So this is our own version of glamping lah. Like we go in the national parks. When we wake up, we slide open the van door. It's that view already. And then after you can drink your coffee, cook your breakfast over there, and enjoy that while managing the business remotely too. Yeah.
So I think I probably can add a little bit. So ever since I've met Han and Tracy, one thing that's been consistent is that they said very early on that their dream and their passion is really traveling, going on sort of a glamping type trip, seeing new places. Tracy likes the outdoors and taking pictures of wildlife. And the point of the story is that they identified a goal in their life and they found a path to that goal. And that goal requires not going to work at 9 and leaving at 5. That goal requires having freedom to do this. And their pathway to achieve that goal was through investing in US real estate to generate passive income. Now, not all the time you can have a goal and execute it with that type of outcome. And trust me, these guys are smart guys. They identified as many investment opportunities that they could realistically execute to achieve this goal. And frankly, they did it. So it's an inspirational story. And I'm always happy to see them. And when they tell me about, when I see their pictures on going through the US, driving in their, super luxe van. So I guess one thing, everybody in our audience shares one thing in common, aside from being on our distribution list. And that is everybody on this call are investors first and tend to be international by nature.
Yeah.
So and what that means is there's a plethora of opportunities out there that they can choose from, right? So I guess I'd like to hear from both of you intelligent international people. Why did you choose US real estate as an investment tool, as opposed to say Singapore or the UK or Australia?
You want to take that?
Okay, cool. Yeah, so we did explore quite a few avenues, but I think most importantly, it must be able to suit our goals. So we are looking for cash flow, we are looking for passive income. So definitely looking for something that can that pays you while you own it. Yeah, so we look all over the places like Malaysia, Thailand, Australia, and places like that. So but we came to the point to a decision whereby we realized that actually US is very attractive. Number one, because it is very affordable. We can still find $150 to below $200,000 properties that have high rent to price ratio. So give an example, if we usually look at the 1% rule. So for example, if like you buy a $1 million property that generates $10,000 per month in rent, right? To collect $10,000 a month in rent, it's very rare to find this kind of rent to price ratio anywhere in the world except maybe US. Yeah. So at the same time, it has a very, very high number of rentals. Yeah, there's a high number of rentals. Because of the economy is very dynamic. People are always moving around. So that's why the first thinking is they will usually, when they move around, they rent. After they rent, they are comfortable with the place, the job stability is there, then they buy houses. So there's a very huge rental pool. In fact, I think it's about 50% of the people rent. So this contributes to the higher rent to price ratio. Yeah, and a small little benefit is like there's 30 years fixed rate mortgages. I don't think there's anywhere in the world that have 30 years fixed rate mortgages where you buy and your rates are fixed for 30 years. Even if interest rate goes up, it would not affect you. And when interest rate goes down, all you do is call down now. Yeah, you call down now and you refinance. And with that, the moment you do that refinance, although your rent stays the same, but your cash flow increase a lot because interest rate goes down, you refinance, your mortgage payment goes down, and boom.
So I could add a little bit here, and I think some of the invites that we sent out, one of the things I say is that it's fine for us talking about this, but people may think that we're just trying to sell our product. But when you hear from a practitioner, it gives us a lot more credibility. And I want to say a few things about the US is that one, and this is public information, it's factual, that there's a 6 million home shortage in the US. In fact, over the last 10 years, there was a 6.5 million households were formed, then homes built. Okay, so there's a shortage. And I think to what Han said, the US, for all the things you see in the media and read and whatnot, the fact is it is probably the most gentrified country in the world, in that if you can't afford to live in one state, you can move to another state, go to public school, get a job, and meet ends meet and support your family. That doesn't happen in many parts of the world. The other aspects of what Han said that I wanted to talk about were, one, obviously the cost, and also, there's different policies that have been put into place over the past few years that, for better or worse, it is a result of maybe some geopolitical issues, but all countries are trying to bring manufacturing back on shore. And we see a lot of this in the news, and those industries require a lot of jobs, whether that's building semiconductor factories in Arizona or in the Midwest, or there are 9 EV factories being built in the Southeast corridor right now, and each one of those has to hire 2,000 to 5,000 people. Now, if you think, are these people who work in these factories, are they able to buy? Unfortunately, not. Hopefully, they will at some point. But like Han said, they're going to rent, and so being a landlord at this cycle of the economy is a really, really a good opportunity. And last but not least, in fact, I forgot what I wanted to say earlier, but now I just remembered, luckily, is that the US has the highest rental yield of any G20 country. It's the 11th highest rental yield in the world, right? And the top 10 are countries that, most people haven't even traveled to. And the average rental yield in the US last year was 8% gross. So if you take out California and New York, obviously that's a lot higher. And that's something that is real, that's tangible. And a lot of the world doesn't see this information. And that's why it's great for us to have folks like Han and Tracy come up and join me on my evangelical crusade to promote, the benefits of, US real estate investing. I wanted to get into, I'm particularly interested about, which is, they were just in the US, they traveled around, went to different states, obviously saw their rental portfolio, which is, by the way, 18 cash flowing homes at the moment, and they were at 4 not too long ago. I think when I first met them, not too long ago, which is super impressive. But I'd like to get a sense of, like, what did you see on the ground? Did you feel as strongly? Property price interest rates have gone up 400%, right? 400%, but property prices continue to be squeezed out, probably because of the lack of supply. Now, what did you see on this trip? Or were you like, what's your vibe? Were you more, is your thesis the same? Is it different? Are you looking at other opportunities? Like, tell us, myself, and I'm going to be taking notes, and the audience about what you saw out there.
I think it's interesting when you talk about the gentrification, because we really saw a lot of gentrification right before our eyes. So we went to US. The first time we went there was back in 2019 to sort of survey the areas that, we did a lot of research online, and then we went in 2019 to just take a look in real life. And now when we went back to those same places, it's like from the ghettos to like art museums, fashion district, like
hotels, chic bars, chic cafes.
Yeah, like the gentrification is crazy, and property prices in such areas have went from like $30,000 for a house that nobody wanted to now all like close to $300,000 in just 5 years?
Yeah, about 5 years.
Yeah, like it's really crazy. And of course it's not like across the whole US, every city is like that.
But there are pockets of places.
Yeah, if you do your research to figure out, which are the strong cities, what the government's doing, what are new businesses coming in, is the population growing? If you do your research, then you can find these kind of gems in the US.
And it's not only one place, there's a few places. Yeah, and when we go around and we talk to people, some of the vibes that we hear is that, that there are a lot of, because of the reshoring of jobs, so there's a lot of movements, a lot of people moving around. So the rent and home demand is very, very strong. Like when we are there, we bought a few properties, and the general sensing is, if the property is nicely done up, rightly priced, you get 50 overbids on one property. So it's pretty vibrant and exciting in that sense. And rents have also, gone up significantly, and it's exciting. But of course, when we hear of that, it's like, wow, really? How can people afford? But they also say that, because of all this reshoring and inflation and stuff like that, and tight labor markets, that's why the income also have gone up. So it's growing in a sort of like a sustainable place. But then because we got in at a good time, and we are able to, see the growth and feel the growth when we talk to people there this time around.
Interesting. Yeah, it's one thing, I just want to go back on this gentrification topic. It's one thing I mean, we live in Singapore, so what I'm about to say, you may not be able to relate. But if I'm working in CBD and living in Orchard Road and I can't afford to live Orchard Road, I want to go move to, say, Serangoon Gardens, I still have to commute to CBD to work. Whereas in the US, if you can't afford to live in California, you can move to, say, Texas. And there are actually industries in Texas that you can. So not only is supply of jobs, there's also demand of jobs. So it's a super flexible economy. One thing I wanted to, and I think this is a good segue for those of you who don't know Han and Tracy's, secret sauce, which they're not going to give away. But I think maybe talk about like what your strategy is. So obviously, like you say, you go and you see a super nice house. Do you want to be one of the 50 bidders, right? Because, there may be less pricing,
Negotiation power.
being able to negotiate
Yeah.
on super nice houses. So maybe you talk about briefly talk about the strategies that you have. I think we're going to go into maybe what some of the things that you're offering on a professional level. But yeah, maybe talk about this strategy.
Okay, so it's not a secret strategy. Actually, a lot of US real estate investors use this strategy. So actually, we just learn from them. Even big names like Robert Kiyosaki, Ken McElroy, they're all using this strategy. So actually, what we did is we learned how to do the same thing they're doing, but from outside the country.
Remotely. Yeah.
Yeah, remotely. So the strategy is called BRRRR, which stands for BRR, which is you buy. I'll just go through it briefly.
Yeah.
So BRRRR stands for buy, rehab, rent, refinance, repeat. So buy, we don't want to compete with those competing for the beautiful houses and the swimming pools and the chic cafes. We go for the houses that have been neglected, but that's not saying that they are on the farm site in the middle of nowhere. They are actually in the town area, but somehow perhaps the owner didn't maintain it, or for some reason it was passed down and nobody stayed inside for many, many years. So they have just been neglected. And we go for this kind of neglected, a bit run down conditions of houses so that we can buy it with less competition and of course undervalue. So once you buy it undervalue, you put in some money to renovate it. So that's the first R, to rehab or to renovate it. And after you renovate it, now it looks nice, right? Like it looks like all the other houses on the street. So let's say on the street, all the houses are selling for 300K. You bought this undervalued one at 200K, and then you put in 50K of work to renovate it. So you have spent 250K, but now your house can be valued at 300K just because of the renovation. So that brings us to the second R, which is you rent it out, right? After you renovate it, you rent it out, start collecting passive income. And then the third R is to refinance. This is when American Mortgages really helped us.
Yeah.
Refinance is where you go to the bank and you tell them, hey, now I have this house, can you do an appraisal on it? And they say, okay, your house is worth 300K. So I'm going to give you a percentage of that as a cash out refinance. It's like an equity loan in a sense. It's called a cash out refinance in the US. So that's where we have done lots of cash out refinance with American Mortgages, where they pull out our equity in the house as cash, as a loan. And with that cash, we do the last R in the equation, which is to repeat the process. Because now I got a bunch of cash out. I use this cash and go and find the next ugly house, and then we repeat the whole process. I don't know if it's too complicated, but we I mean, if we follow our YouTube channel, we do have a lot of videos explaining the burr process.
And the beauty of it is because there's a big price. The price discovery in the US is not as homogeneous as a lot of Asian markets. So because so in a way you can actually buy very undervalued, fix it up for less than what it could possibly appraise for. And then after that, when you take the cash out refinance, we have done it a few times whereby when we cash out, we pull out our initial entire capital, which means that there is no money from our own pocket in the property. And this has helped us to accelerate our portfolio growth very, very fast. Yeah, so that's one thing I like to share and highlight, that this is like, really, really help us a lot.
Yeah, so the audience out there, the benefits of US real estate investing is it's not known to most people outside the US, but it's really could be maybe one other market, one of the very, very few that's giving you positive cash flow, and the prices are going up. So which allows you to execute these type of strategies. And just for those in the audience, the way, and I'm going to go into our mortgages later in this presentation, or shortly in this presentation. But what Tracy and Tracy are saying is that, if something is worth 300, we can actually pull out more than 70%. Let's say 70%. We can pull out 70% of that in a 30-year fixed mortgage. So it actually is exactly like a normal mortgage. And we can also help with the buy using a short-term bridging loan, because the way mortgages work is once you have rental income, that asset generates cash flow. So to be able to lend on it is a lot easier, which I'll get into a little bit later. And I think one thing, and I'm sure everybody out there is thinking the same thing, so I'm just going to ask it, like, how did you execute this from Singapore? Was it difficult? The short answer, I'm sure it was. Anything in life that is worth having and accomplishing is difficult, but talk about that experience.
So it was definitely difficult at first because there was no one that we know of that is doing this, so it was hard to figure it out. But of course, slowly we really hustle hard. Initially, we really, because of the goals that we want to do, we really were very, very driven, burn midnight oil, talk to many people, do Zoom calls at night to, see the properties and stuff like that. So we in a way, find ways to sort of self-taught ourselves on how can we overcome all these challenges, be it the distance, be it all this, how do we have boots on the ground to help us to get certain things done. Yeah. So yeah.
And again, I think their secret sauce, if you will, and sort of their journey, they can talk more about it, on their YouTube channel and their program. But I think this is another life lesson that Han and Tracy have just talked about, which was, if you want I think the years of easy money and things were easy are gone. And I think if you want something enough and willing to put the time, effort, and persistence into it, and learn to fail along the way, and we could probably speak another 5 hours on your failures, right? Which I can empathize, but yeah, it's these guys have done it. Regular people, locals, foreigners, they're not US citizens. They don't hold any special types of visas. But in the US, all property is freehold. And so what that makes it, super interesting as well. I guess, before I go into some of the mortgage topics and maybe talk about your program as well, but maybe talk about your outlook for what you do. Like, are you still as bullish, or are you bullish in other areas? What are the opportunities like?
Yeah. So what is our outlook, and what are there opportunities? Personally, after being there for half a year, talking to the people, looking at the things that we saw on the ground, we are pretty bullish. Number one is because of the reshoring of the jobs, there's really a lot of opportunities, job opportunities, which means that there's a lot of how to say housing demand. With housing demand, definitely, as mentioned, rent will grow, home prices will grow. Yeah. But at the same time, I think in general, if I mean most economies in the world are trying to hit a 1 to 2% inflation target, and with that, actually, it is a tailwind for all hard assets owners, investors, because you take a fraction of the the inflation will drive up asset value, but because you when you buy this kind of assets, real estates, you take a loan on it. So actually, your cost is a small fraction of the entire asset value, but it grows at the big value. Let's say the property go from 300K, went up by, let's say, 2%. It's a very small 2%, but because you only take a loan of maybe
because your down payment.
yeah, your down payment is 70K, for example. So it is not a 10% growth in that 70K, but it's a 10% growth on the entire 300K. So it's being magnified. Yeah. So, and on top of that, what else?
I think we've always been bullish whether the interest rates were high or low.
Yeah.
Because there's always opportunities in the market.
Honestly, interest rates actually that high it was actually a better opportunity in a very perverse way, because people who sold, they needed to sell.
Yeah.
That means that you had pricing power.
Yeah.
I've just been given a message by our producer that if you want to speak about a mortgage, there's a link in our chat box to contact myself and my team. If you want to learn more about Han and Tracy's masterclass on how to replicate their success, it's in the chat on your Zoom. So if you have any questions, ask that on the Q&A and we can answer that. I think this is a good time to talk about mortgages. Prem, if you could pull up the one-page mortgage summary, that would be great. All right. So this is a one-page synopsis of all of our US mortgage programs. There's a lot here to digest. But one thing that I will point out is that, one, as a foreign national, we can lend up to 75% of the home's value. If you're a US expat, you can lend up to 80%. Everything we do is US market-based procedures, rates. What we are bringing is we're bringing the mortgages to you. Instead of you having to go to the US, we're in your time zone, speak your language 24/7. But if you look at the highlighted bullet point, this is a loan program that we pioneered for our overseas investors, which we call a rental coverage ratio program. And what that means is that if the rent covers your mortgage and mortgage related expenses, which is taxes, insurance, and HOA, if they cover 1-to-1, you qualify. So you don't need to qualify on your personal income, because nowadays we realize that people they don't have 9-to-5 jobs. They are staying home trading Bitcoin. They're doing things on TikTok. They have various income streams. And what banks want to lend on are like, you've been working at, IBM for 20 years and you have pay stubs, but the world is moving away from that. So this is a really, really good loan program to qualify without showing personal financials. And just recently, last week, we had a lady who's like, my husband got a job in Singapore. I used to work in the US. I don't work anymore, but, I have some savings, but I can't get a mortgage because I don't work. Well, you don't have to work. The house generates income. Income covers your mortgage and related expenses. You qualify. And just to note, we approve 97% of the mortgages. They take 30 to 45 days to closing. 45 is really on the long side. It's really more around 30. You can sign the closing documents in your home country, at your embassy, or at a local a law firm, and we can issue approval within 72 hours. So if you want to know, all the loans are 30 years fixed, and there's interest-only options available. So we have a lot of loan programs. We pioneered this. We're the only place you can get a US mortgage outside the US. And if you want any more information on that, please ask in the Q&A session, or sign up to speak to our loan officer in the chat box. Here, there are two QR codes. On the left is Han and Tracy's program, their contact details. And on the right, the QR code is for American Mortgages. If you have any questions, you can also just, email us. We'll put you in touch. If you have any questions. But I think we've covered all the main points on this, but I think these talks are more about the Q&A, and because we get to hear what our audience has on their mind. So I'm going to jump right into Q&A. All right. So I get to use my phone. Well, this is not really a question, but one of the attendees says that their dream is to travel the Grand Canyon, and they think your story is very inspiring. And whoever wrote that, I would have to agree.
Thank you.
Oh, thank you. You can do it too.
We can do it. All of us. Yeah.
Okay, this is from Gray. How much capital do we need to start investing?
How much capital do we need to start investing? So the properties can be you're able to buy properties between 150 to 200K. You can either do all cash or you can do it with loans. So usually if you do you get a loan on it, is about what, 75% loan. So 25% of 150K, yeah, thereabout.
Yep. I can answer a little bit about this as well. So I mean, this is not investing in a stock or a bond or other assets. There is some friction involved with finding, good tenants. There's some operational things that you have to overcome. So you can look at $50,000 homes, but they may not be in places that you'd like to go visit or hard to collect rent. In general, our loans, for some of our loan programs, the minimum is 100,000 US. So if you think about 75% loan to value, the home prices are 150,000 US at the bare minimum. I think the sweet spot's probably a little higher. Like I think 300,000 and 300,000 is a good, but it really depends on, I think what Han and Tracy is in their program, which I haven't signed up yet. Sorry guys, but I will. But part of what I'm imagining they're going to teach you is that, their strategy may not be for you. I mean, the strategy can work, but where they buy may not be where you want to buy. Yeah. Maybe where I want to buy, but the strategy is the same.
Yes.
So, there's a lot of factors that are personal to you. For example, if it was me, I want to go someplace where there's no more than 2 flights. So, I may not invest in North Carolina, although it's a fantastic place and people like to invest there. That wouldn't be for me. I like places where, maybe I look at what schools are there just because I think people are attracted to good schools. But there are different factors that come into play, because you have to think about you're no longer buying to live in, you're buying to rent. Yes. So what would you want to own to rent out? So you have to put yourself into a renter. What kind of renter do you want to attract, and what do they want? What are they looking for? And things like, well, I want to move from California because it's too expensive. Where are the best schools? Where are the safest school districts? Where's the local Walmart? How many Starbucks are in my neighborhood? All these things ironically do matter. So you have to do your homework. But anyhow, the point being is, I think $50,000 you can get started. In this game, $50,000 to $100,000. I mean,
like you mentioned, 150, because anything lesser than that usually it may not be the best place that you want to invest in. Yeah. Or at least that's what we are looking at, 150 to 200.
That price 150K to 200K can be in pretty good areas, pretty decent neighborhoods, good schools, good universities, a lot of jobs. So that's the kind of price that we see.
And so for 200K, what that means is that you need about, say, 50,000 US in down payment, or about 70,000 Sing dollars.
Yeah.
So I mean, where on earth can you buy a home in a G20 country, or maybe you can in a big country with strong rule of law for 50,000 US, earn positive rental yield? and prices are still going up.
And like these homes are landed freehold.
Yeah.
You know, it's not like a small little studio.
No ABSD,
No
no,
ABSD.
no stamp duty,
Yeah.
no anti-cooling measures.
And more importantly, actually, you're only forking out the down payment because the tenant is actually paying the rest of the loan for you and your pocket money.
Yeah.
Yeah, so it's no brainer for us.
Yeah.
Something that, while the BRRRR method, the refinancing component is very important because what they're doing is forcing the appreciation. But, the beauty of a 30-year fixed rate mortgage is you get locked in, right? You find the house that you like. In 3 years, the house could be up 20%, which is, it sounds crazy, but actually it might even be conservative in some states. And in 3 years, you come back to us and you refinance it at a higher appraised value, and you basically recouped some of your initial principal. Now you can and now rates are going down. So you have two things that are happening. If you think about a business, what are your costs, right? Your costs is my mortgage and related expenses. That's going down because interest rates are going down. And what's my income? Rental income. That's going up. And now there's capital appreciation here. So over time, rents are definitely going up. So your margins are expanding.
Yeah.
And 3 years later, you refinance out and you reduce your initial investment, which is kind of the beauty of this
Machine.
machine.
Yeah.
Yeah. The house is like, we always say the house is like an ATM machine because every time in 5 years or 7 years, with the appreciation and the principal pay down by your tenant,
Yeah.
you can just refinance again to keep putting out the equity as a loan in cash.
And one thing for the audience out there that, we, strongly advise, in fact, we'd like to make it mandatory that when you buy these properties, it has to be bought through a US LLC. This is really standard off the shelf stuff. It's just a few $100 to set up. But with an LLC, you can deduct a lot of related expenses because you are deemed in the tax authorities in the business of real estate investing, which means that a lot of associated you can deduct, going to see the properties and things like that. So can you expand on how you overcame your operational issues doing this remotely? Can you share some specific examples, perhaps? Yeah, so I think this goes back to the first webinar. In fact, I think when we send a thank you email to everybody, we'll post your first webinar because there's a lot of interesting information there. Some of that information was talk about some of these, what you need to building the team.
Yeah.
I remember that's really important. You want to talk about that?
Yeah. So these are part of our masterclass programs. So usually we will need to know who's in our team. First is we have to pick the right market, right? We have to pick the market that is suitable to your strategy or your goals. And after you do that, then you start to build your team. You build your team, you need to find like your realtors, your wholesalers, your property managers, which is important. If you need, you find your contractors, and your lender, right? And then after that, then you need to build trust. They need to build trust with you, and then of course you trust them, and then you do your video calls. If you view your property, you do your video calls, and you establish operational understanding with your property managers, like, can they show you pictures? Can they show you, stuff like that? And your approvals, how do you manage your costs? How do you manage approvals and all these things? So all these are part of that you lay out when you talk to your property managers, and it's all written in your property management agreements. So all these you just got to inspect, negotiate, talk. So these are some of the how you overcome operational operational challenges in that sense.
Yeah, and then we took like almost 3 years.
3 years, yeah.
To figure out everything because like the whole buying process is different, right? I mean, for example, in Singapore, it's pretty straightforward. The real estate agent gives you the contract, many pages, you sign. But down there, you're on your own. You have to check all the contracts yourself. You gotta check whether you received all the necessary documents. Your purchase contract.
And it's state by state.
And every state is different.
Yeah, very different.
And even every city is different in the same state.
Yeah.
So really figuring out the process took a while. And then, of course, how to close remotely, out of country, right?
Yeah.
Actually, it's really advantageous to have a lender who knows how to deal with foreigners because we felt the
Yeah.
real pains. So like how to close out of country. And then like Han mentioned, even picking the city you want to invest in it's quite a rigorous process because the US is so big.
Yeah.
And there are different laws in each state.
Yeah.
So I mean, it's a few of the technical stuff that in our masterclass we do go through. How do you do it step by step? It's very actionable, I would say. Yeah.
Amazing. So we have a lot of questions. I'm going to zip through some of these really quickly. Do you need to set up an LLC or some US entity to protect yourself? The short answer is you don't need to, but
You should.
you should.
Yeah, you
Almost,
should.
I hate to say you have to, but you have to.
To
Number
protect
two-
yourself for liability.
Totally,
Yeah.
totally. Aside from the tax benefits, somebody's slips on a banana peel in your house and hits the head and something happens, you want to protect yourself. Where they remove the liability away from you personally and focus on the kind of claim. As a foreign investor, does a foreign investor require foreign investment approval from the US? US government is part of their home application? No.
No.
I mean, that's the beauty of the US. It is the land of the free. Anybody, unless you want to go buy a facility that builds missiles, land, homes, everything is freehold. There are no restrictions.
No foreign restrictions. No
Yes,
foreign
Yeah,
restrictions.
we buy like locals, there's
Yeah.
no foreigner
And,
difference.
and that's also another reason why you set up your LLC in the US. Then it is not you buying, but it's the US LLC that's buying. It's a US company.
Another question is, how do you get past the psychological difficulty or discomfort of remote investing, in particular a country so far away from Singapore? I'm going to add something really interesting, because I think it is a mindset, because I own Bitcoin. I've never seen it, right? I own Apple shares. Aside from a phone, I've never seen their campus. I trust management because I see them on TV. They have a good product, but there are people that invest in Vietnam because they think it's easier. But why is it easier? It's closer geographically, but so I think there is a mindset hurdle for some reason.
Yeah, it is. It's like even if you like, we are from Singapore. If I own a property in Singapore, do I go there every single day to check on it? I don't lah. So, but now and because we want to build a lifestyle that is able to allow us to do it remotely, we design the whole business model to make it remote. That we want to engage people to help us do the things, and then so that we must be able to work the business model such that we can account to pay for all this, so that we don't have to do the work ourselves.
We want to travel the world. So we want to spend. We don't need to always be in US. We can spend the next year in Antarctica. We can spend the next year in New Zealand. Like we want to be remote. So like even when we are in US, even if we are in driving distance to our properties, if something
We don't want
spoils,
to. Yeah.
we don't go there and
We
fix
don't want to do it.
Yeah.
because we build the business to be remote.
Yeah.
So we always want to. That's why the team is really important to build network and connections and a team that you can rely on to do things for you. And of course, you do your check and balances.
So Han and Tracy's burn method, again, it's not for everybody. They've been very successful at it. It requires, as you can imagine, a lot more time and commitment. But this is this is the life they've chosen, and this is the work that they are committed to putting into it. But you don't have to do the burn method. You could find a positive cash flow home. I mean, there are states that have no or low income state taxes, and people are moving to those states. So they're different. In Han and Tracy's program, they'll teach you the methodology of looking. But like if you're investing in stocks and you want to buy cheap stocks, you look at PE ratios, right? It's the same for buying property. You have to be systematic about your approach. What are the tax obligations as a foreigner? The obligations are the same as a US citizen. I mean, if you are earning income, right, which is your rental income, you have to pay taxes on that per their state requirement. But there are a million tax
Strategies.
I was gonna say loopholes.
Strategies.
that help you limit your tax liability. And we, on our website, we have partners that can help with this. that focus, they're based in Asia. All they do is focus on expats and foreign nationals that need tax advice. What is the most popular loan programs? So right now, by far, it's the rental coverage program, whereas if your rent covers your mortgage expenses, you qualify. The second is, using your income to qualify. The rates are about the same. And last but not least is really bridging loans. Bridging loans has been so popular recently for a few reasons. One is if you own property, a lot of it, and the prices have gone up, you're sitting on a lot of equity. People have used this to pull out money for their own personal use or to buy more property. So these tend to be short-term loans. We just look at the value of the property, not any type of income, but it's used to accomplish sort of financial needs. And while I'm on that note, I have to do a shameless plug. We offer bridging loans in US, UK, Australia, and Singapore. So if you're in need of cash quickly, we have these programs that allow you to extract cash from your home equity. Oh, here's a really good question. How do you protect this is from Aru Muta. Yes, I can say your name since you wrote it. How do you protect your cash flow from loss of rent not covered by property insurance, i.e. long periods of vacancy?
Oh, okay. So I think this comes back to your due diligence and your research. Why would there be long vacancies? Is it because bad operation or because the market has lost housing demand? So I think to overcome that, probably you look at housing markets with tailwinds that has job growth and population growth, and you pick neighborhoods that are desirable. So with that, it will reduce the fundamental risk of having no demand, low demand. Yeah, and then after that, the next thing will be operational. Is your house nicely renovated? Does it have weird stuff, weird layouts and stuff like that? Smelly things across the street is some rubbish dump or what? Then maybe you have high. So all these are part of it. Or operationally, your property manager don't pick up the phone, don't reply to. But so these are the things that you try to sort of reduce the vacancy loss from there. Yep.
Okay, so here's I guess I could answer this from Mr. Elliott. Using the Burr method to constantly pull out equity in exchange of debt means you're okay with increasing amounts of debt because there's a substantial decline in housing prices of the US, means you could be over leveraged, which would then trigger more serious consequences of defaults and foreclosure.
Answer that.
So, okay, I will say two things. There's nothing free in the world. Apple could be down 50% tomorrow. Of course, it's not going to be. But if interest rates can go up 400% and home prices still go up 20%, that's not an issue. Now, of course, there's bigger, broader macro things, but the issue is that when you do your work, you have to form a thesis that you feel I'm confident. So there's a lack of homes, there's increasing demand. You have to think what's going to make home prices fall a lot. It can't be supply because there's a shortage. And so it could be there's a global mother of all recessions, depressions, and a bunch of people lose their jobs and they all have to go home and live with their parents. But there's still a 6 million home shortage. And even if prices go down, doesn't mean rents are coming down. You're thinking about you're earning rent, and also debt is not taxed. The richest, there's a mindset, I grew up in a mindset that you couldn't, debt is bad, but smart credit card debt is bad.
Good debt.
Good debt is
Good debt.
good, because you're taking advantage of the system, right?
I think I want to maybe just jump in a little bit. Maybe Donald, can you share the US loans, is there margin calls if the home value drops significantly? Yeah, so I think in a way, what the person that was asking is he's worried about if the home price drops significantly, then there's a margin call. There is no margin call as long as you continue to pay your mortgage, it's fine. So then the next thing will be, he started off by having the Burr model. So the goal is to be able to, when you take out the loan, you must cash flow. So your rent must be high enough to cover for the mortgage. As long as your rent can cover the mortgage, even if you take out, in inverted comma, a lot of loan, it is not considered excessive because it's still good loans. It's loans that are covered by the income and by a good haircut of margin. Obviously, you should have some discipline to have reserves in your LLC or whatever, personal, if you're doing it personally, you should have reserve to make sure that if there are some vacancies involved, you're able to still finance the monthly mortgages when it's vacant. On top of that, I would say that when even if there's a crash, okay, this is a very interesting thing. If there's a crash, the question is how much can it crash? Can it crash to zero? Eventually it is still a commodity. Someone will still need to live there. Would you, if there is a demand, there's jobs there, would it go to zero? That's up to you to decide yourself. But in my opinion, I think it's very difficult. There's a floor price to it. And the floor price, if you ask me, it will be the cost price, the bare minimum cost price. There's labor, there's material cost. If it goes below that cost price, nobody's going to build houses. Then as population increase, there will be demand. So there's that very dynamic equilibrium over there, whereby if there's a floor to how much it can go down to. So you just have to manage your risk according to how all these numbers goes.
Yeah,
Not sure is it.
There's also a little mindset that, like, if there is a global crash or a recession, that your property is not going to be able to rent out. But actually it's the reverse, because if people start losing their jobs, they will not be buying new houses and they will actually fall back to renting. Now, if you buy, I mean, like us, we don't buy like mansions by the beach and castles and stuff. We buy very normal, everyday people homes that the majority of the population will live in, can afford, can live in. So if you go to these cookie cutter everyday people homes, right? Like even in a recession, these are probably the ones that are highest in demand because they're affordable, they are decent to live in, and people always need a roof over their head. It's a basic necessity. So I feel that long-term tenants, in terms of, as in not short-term like Airbnb and those holiday
long-term
homes,
rentals,
but like long-term rentals, like what we do, is actually a hedge against recession. Because in recession, people still need their roof over their heads. And because we don't buy expensive like castles and high-end properties, we buy the ones that the majority of your rental pool needs, then it's really your rent demand will always be there.
I have a few more questions. I think some of these are the same question asked a different way. I think looking through all these questions, I think there is a execution hurdle to what you do that is, I think part of the US is there's two oceans separating it from everywhere else in the world, and there's just not enough information. You don't see US homes being, at conferences and the hotels, right? So, this is something super exciting, but nobody knows, and it just seems so daunting. Like, you've got to talk to contractors. I mean, here's a question: is how do you avoid your contractor? I mean, this is all, Mr. Alexis. This is all super good questions because it's practical. Like, how do you avoid these guys ripping you off? They're over there, you're here. Like, you want to answer that?
Yeah.
How do you find a good property manager? How do you find?
Okay, so the first thing is it's difficult to that there's like two oceans separating it. So it's the same for us. So I think maybe it's time for us to also share a bit of shameless plug. So our masterclass do share all this information in detail, and even our personal experience, our triumph and our sorrows and pain.
I think I would say that our masterclass, we do have a lot of graduates that we are very proud of also, because they are also from all over the world. They are from Singapore, Malaysia, Japan, and they
South
actually
America.
managed to buy their first rental property in the US, like after going through. So I mean, we are really very proud of that as well.
Yeah. So to answer that question, how do you first is like you must know your numbers so that you know roughly where would it be, right? You must know your numbers. So if you know your numbers, they can't rip you off. right? If you know your numbers, they can't rip you off. And then you
Talking about
have
the contractor.
yeah, that's on his question on contractors. You must have check and balances. For example, you do payment milestone, don't pay all at one go. Yeah, I mean, there's no way I can finish all the tips, but these are some of the tips. Is how you have how you manage your business, how you control, how you negotiate with them and stuff like
I
that.
think it's the same anywhere in the world. It's not just if it's overseas. Like even if it's in your home country, right?
Yeah.
You also would want to, you don't want to pay the contractor too much upfront. You want to split up your payments and make sure that you see proof of the work done. In Singapore, maybe you can physically go to the house and check if the work is done. But if it's remote, right, you just need to get someone you can trust to go to the house, and you can do a video call with the person.
Third party.
Yeah, a third
party.
independent party, not the
Correct.
contractor himself.
So
yeah.
So there are operational, there are operational solutions to overcome these challenges. Same for property managers, like I mentioned just now before. You sort of govern your working relationship by your contract, your property management agreements. You and then so you approve, you read through like when do they pay you, what kind of maintenance approval before the repairs. If there's repairs, take picture. After repairs, take pictures. Rent, you got to know how much rent you can rent out for. Yeah, you got to know your stuff lah. Yeah.
And I would say that you can also check, I mean, for contractors, like licenses.
Yeah,
That's something you can check. Ask them to show you
yeah.
their licenses and stuff.
Yeah, check for the licenses, check for their if it's a like their business registration, all these things yeah.
So we're coming to the end of this. Everybody that asked questions, I promise we will answer all of them on a private email to all of you. I want to thank everybody for joining this evening. I also want to thank our guests, Han and Tracy, for taking the time to join us and spread the word to our audience. And I will leave it to them to say goodbye to all of you and hope to see them. I'm not going to go to Antarctica if you go there.
It's beautiful.
Hopefully I'll see you soon. But you want to say parting words to the audience?
Yeah. Thanks so much for taking time to listen to us. And there's so much we can talk about. Like Donald said, we can go on for 5 hours or even 5 days. So if you do want to reach out to contact us, we are on social media, Byte Size Investments, whether it's Instagram or Facebook or our YouTube channel.
Yeah.
Or of course, you can always ask American Mortgages to link us up. That's fine too.
Yeah, and thanks Donald for giving us the opportunity to share this with your audience.
Great. Okay, with that said, everybody have a good evening and look forward to speaking to all of you very soon.
Okay, thank you.
Bye.